This is the Ask Faleskini podcast, where the modern economy is discussed from a skeptic's perspective. Mr. Faleskini helps you distinguish what is sustainable in our economy and what isn't. Not everything that glitters is gold, and not all mud is dirty. The podcaster Mr. Faleskini provides no-nonsense advice. He had it all, lost it all, went bankrupt multiple times, and is now attempting to come back from zero with sustainable growth. There are numerous coaches and preachers on the internet that preach about positive thinking and how life is all roses if you just care to see it that way. Well, Mr. Faleskini is definitely not one of them. We recommend you ask Faleskini to keep it real. He discusses the darker side of the current economic reality, the side that's more important for your personal and business finance. His first intention is to help you keep what you already have. Not to be a complete party pooper, Mr. Faleskini will also hint at the earning opportunities in the economy today. In order to please the almighty algorithm, please like, share, and subscribe. And now it's time to start taking notes. The mic goes to the podcaster, the one and only Mr. Faleskini.
Welcome to Ask Faleskini podcast with a guest. I'm proud to present Simon Popple from Lewes, England, United Kingdom. Simon is educating those over 50s about investing in gold. Simon, please tell us more about yourself. What's your story?
Well, basically, investing in gold has been very kind to me, and I want it to be kind to other people. It's an unusual asset class. It's been around for thousands of years, but for many people, it's a new opportunity. They've looked at probably bonds and property and equities in the past, but they've never looked at gold, and I think they should. I think now is the time more than ever to be looking at gold, and I think there's a massive misconception about investing in gold. People are like, "Well, I don't want to have gold bars lying around the house," and to be honest, neither do I, and neither do I. I don't, and so what the book and the gold package I put together tries to do is to kind of explain all the options you've got, and there's a lot, and some are suitable for some people, some are suitable for others, but it's really to kind of get people started and interested in the asset class.
Oh, great. You mentioned a couple of things. One is you have good experience. I really like to talk about bad experience because they teach us the most. Did you have any bad experience with a business partner or with a client that you could discuss on this podcast?
Yeah, sure. I mean, talking about the wide range of options, I mean, I use a fancy football format that people perhaps in the UK will understand more, but basically there's different degrees of risk. And for example, my child goes to a private school, so I put the fees in physical gold, which I view as less risky. And then in fancy football terms, that's my stadium. Then I've got a goalkeeper, which is like a massive company, a defender, which is, still probably several billion market value. Then I've got midfielders, which are sort of smaller. And I've had, some huge success with my forwards, which are explorers, which are far riskier, but the returns can be astounding. And, I picked Chalice, which you can look up. And I picked it at around, I don't know, I think it's about 13.5, 14 cents. I can't actually remember exactly, but it went to over $10. So people made over 65 times their money on it. So, what I like about the sector is, you can have a nice, sensible approach to it. And yes, if you get some winners, it's fantastic. But I'm actually quite conservative myself, so I like to have more defensive positions. But it's like any team, you need players in all the positions to win.
Okay, really nicely put it. So I would like to ask you more about the difference of the assets. How you're talking about the gold as an asset class, but then you divide it into different categories. So one is physical gold that you tend to avoid. Would you explain, please, why you're tending to avoid the physical gold?
Yeah, I mean, the physical gold, it's there, you own it, it's allocated. I mean, there's allocated and unallocated. I explained that in the book, but What I like it is, it's out the ground, it's there, it's stored, it's insured. I don't have anything on my property, and the value of that moves basically with the gold price. Then you've got producers, which largely move with the gold price, but obviously the amount they produce varies. So you've got sort of a variety of. Sorry about this. You've got a variety of different sort of assets, and if there's any problems with production, or the gold price goes down, or production goes up and the gold price goes down, there's more variables in terms of the price. Midfielders, which are sort of explorers new to production, they're just less experienced at producing, and sometimes they've got a board which is a very experienced board at producing. Other times they've got a board which is a bit of a hangover from their exploration days. So the expertise is more to do with exploration than production, very different skill base. And the explorers are very much about, finding it. Some have already made some good discoveries. Others are very much, starting out. So even within that category, there's lots of different types of companies.
So you're proposing direct investment in this sector or share purchases?
That's right. I mean, basically, what I'm looking to do is to have some physical investment in gold, but then invest across a range of different companies. So you've got a broad exposure. What I personally like about the sector is, we're going to talk about gold really, but you've got silver, you've got other commodities, lithium, nickel, copper. And so what you can do is you can build a little portfolio, it doesn't have to be big, across a range of different commodities, a range of different currencies in different countries. And so it's a nice little diversifier away from what in most cases is the main investment for people, which is their physical house. So if it's in the UK, you've got massive exposure to property in sterling. If it's in the US, you've got massive exposure to property in US dollars. Mm-hmm. So I just like the fact you've got a bit of diversification.
Okay, I will just ask you one more thing about physical gold. I have to get back. What do you think about jewelry and investing in jewelry? Is that a sound investment? Is that something you would do, or if not, why would you avoid that?
Well, it's not so much I'd avoid it, but I think with jewelry, you if you ever want to sell jewelry, someone will basically weigh it, look at the sort of purity of the gold, and give you a value based on the weight and purity. You're unlikely to get much in terms of uplift for the name and all the hard work that's gone into the jewelry. If it's a particularly big brand name, and it a lot depends on which channel you sell it through, then you could make a lot more money. But I think that if you want to have jewelry, I wouldn't put you off that at all. I think there's some beautiful jewelry around, but I think I buy it more because it's beautiful jewelry rather than it's gold. If I want to buy gold, I'll buy gold.
Okay, and it's also that during the divorce, this jewelry could walk away.
There is that. I think during a divorce, a lot of things can walk away, but that's likely to walk away as well.
Yeah. Okay. So I would like us to discuss another thing. You have quite a diverse portfolio, and most of our listeners are in a 6 to 7 figures range regarding their income. What would you think that would be for a person that is just started making 6 figures? What would be the right budget to start investing in gold for them?
Well, it really depends on their personal situation and why they're doing it. But just to kick off, if you can imagine there was some crisis, I recommend that people use established, well-regarded sources of physical gold, and it'd be no surprise there aren't millions of those around. So if there was ever a crisis, you'd probably find that there's the few that there are absolutely inundated with people trying to set accounts up. So one of the things I say to people is, even if you're just going to put a few thousand in, or even a few hundred dollars or pounds into it, just get the account set up. Get something, buy a gold coin. It doesn't have to be huge. And I think, in terms of how much they put in, a lot depends on their circumstances. Are they saving for school fees or retirement, or are they looking to clear their mortgage? Exactly what are their circumstances? And I think that's something you need to discuss with your financial advisor. But everyone's circumstances are different. But I think the bottom line is you should get started. People spend their whole lives working for that gold medal in the Olympics, or if they work hard for their golden years, or if a child's been good, you say they've been as good as gold. There's kind of a lot of pointers to investing in gold, but very few people seem to have done it.
Okay, how hard is to open an account with the institution like that, and how important is the London bullion market gold delivery list when choosing the institution?
Well, look, I mean, first of all, you don't want it delivered. Secondly, every bullion dealer has their own criteria. It's not difficult, but it takes time. And it's one of those things where you're not going to open an account today and buy gold tomorrow. It takes time. So what I say to people is, look, just get the process started, and buy one coin. It really doesn't matter. I've got a friend of mine who's made an absolute fortune from some of the ideas I've provided over the years, and I still can't persuade him to buy physical gold. And I've literally said to him, look, just go and buy a coin. Even if you don't agree with it, buy a coin. And he's made a fortune out of stuff that I've done. I mean, I've been very lucky, because of what I've done for him. I've never had to pay for the ski lodge, so my daughter's now a good skier. I've never paid for a summer holiday. I use his summer holiday house. And I've got that with a few people. So but if you don't believe in physical gold, just get some, and it doesn't have to be much. If you're earning 6-7 figures and you buy a coin, you probably spend that on, a bag of groceries. So, don't just be careful about your opinions on this.
Okay. What would you say? Is there a healthy leverage that you can use in investing in gold, or would that be completely non-leverage investment?
Yeah, I don't like leverage, particularly in gold, because it doesn't have an income. Talking about the team I put together, and the team I think investors should have, you probably find that your gold keepers and defenders are paying a dividend, but gold itself doesn't yield anything, and therefore I don't think it's particularly suited to leverage, and especially in these days of higher interest rates. Obviously you want the gold price to go up, but there's always a risk that it could go down. And over long periods of time, it seems to have gone the right way, but there are periods of time where it could go down. And so, personally, I don't like leverage on it. I mean, I think that if you invest in some of the goalkeepers and defenders, some of the larger companies, they've got debt in them. So you do have exposure to some leverage in the market. But I personally wouldn't, I'm a particularly low risk investor. I personally don't use leverage to buy my shares. I buy them with cash I've got.
Okay, great insight. Can we talk a bit about your book about the gold and gold investment?
Yeah, sure. I mean, basically what I've done is I've put together what I call the gold package, which are really the kind of things that I'm a professional investor. I do it for a living. And I thought, well, what are the key things that people need to know? And so the first thing I've done is my 6 pillars of investing, which is a kind of a bonus, which just takes people through how I look at investments. And it's not just gold, it's everything. And I want people to kind of believe in the asset class first. And so this is a way of getting them to think about investing And obviously, I'm hoping that at the end of this, they say, "Yeah, I want to have some gold." But the whole idea is to be really even-handed, and let people kind of work out for themselves what they want to do. The next bonus I've got is, I think, incredibly valuable. And if I'm honest, I didn't realize how valuable it was when I started doing it. And what this is really what the funds are investing in. If you can imagine these asset managers, they're professional investors. They do it for a living as well, like I do. And but what I've got is I've got lots of different funds, what their main investments are, and then the last link is a link to lots and lots of different funds across the world, and what their investments are, their main investments are. And so it's a really useful thing for people to look at, and sort of work out what they want to do. And the book itself, I mean, that really starts people off on the journey of investing in gold. It tells them what the options are. It gives examples of how gold's performed in some market corrections and things like that. And the whole idea of by buying the gold package, you have got enough to start your journey. I've then got another product, which is a gold program, which is really where I try to hold people's hand. Some people want the hand holding, others don't. But the idea is that you start investing in the sector.
Okay. 2 questions. Are you on a supervising or at least consulting board of any of the funds that are investing in gold?
No, I've got complete independence, so I don't recommend any particular type of investment. I'm used a lot for talking at conferences, and I do a lot of podcasts and things like that where people want to get my opinion on gold and things like that. But I think independence is really important, and I think that what I'm trying to do is give people the information on which to base their own decisions. And fortunately, I think a lot of it is common sense. But within the book, I've got what I call the bridge system, which is an acronym for balance sheet, resources, infrastructure, diversification, grade, and exploration potential. So what I'm trying to do is I'm trying to teach people some of the key criteria that I look at, but it's up to them to make their decision. But if they apply this criteria, chances are they'll come up with the same kind of companies that I come up with.
Oh, okay. So it's not that you're selling signals or something like that. It's more that you teach people how to fish, not give them the fish.
Exactly. I mean, I don't control the gold price. A bit like people don't control the property price or whatever the price is. What I'm trying to do is teach people how to have exposure to the market, how to invest in the market, and in your analogy, give people the fishing rod and tell them that's the lake I would suggest you have a look at, the rest of it really is up to them.
Okay, I would like to discuss some speculations and popular internet rumors and stuff regarding gold, so that we shed some light on these topics. There is a whole movement in US of people that claim that they should go back to gold standard, and that the gold should be money. What's your take on that?
I don't really think that makes a huge amount of sense, if I'm honest. But what I like about gold is you can't print gold. It's physical, it's real. And I think that over time, we'll have a currency system globally where not just gold, but a lot of resources, etc., are kind of important to that currency. But I don't think the gold standard per se makes a huge amount of sense. I'm sure there's a way in which people can sort of get exposure to gold and to other commodities. And I think that's a really important message here. I'm not saying put all your money in gold or put all your money in property or equities or bonds. I don't think that's sensible investing. I think you want to have some money exposed to commodities. Mm-hmm. And I think it's very unlikely we ever go back to a gold standard or anything like that. But let's say we do. If we do, you want to have some gold.
Okay, so it would be beneficial. You mentioned that there's a limited amount of gold. Until basically late 80s and early 90s, gold and diamonds were considered a similar asset class. And something that happened with diamonds is that now they can be artificially made. If we speculate, do you think that gold could ever be made artificially?
The answer is no. I mean, a lot of people have tried and failed. And I think that what I particularly like about gold is it's actually a global asset class. And I can't think of another asset. You talk about diamonds. If you cut a diamond in half, you decimate its value. You don't do that with gold. You could have a gold bar and chop it into however many pieces. It's still worth the same amount. The whole thing still weighs as much, as long as you're careful how you chop it. But I mean, I think that that's another thing I love about gold is I can take a gold bar to any country in the world, say, right, that's a gold bar. They can test it, make sure it is gold, and I'll get good value for it. There's demand across the world for it. I don't know an asset class that's the same.
Okay, another speculation. So this is just a speculation, so that but you're an expert, so I would like to have your take on it. And there's another speculation. In the UK, we believe that our Bank of England has one of the biggest storage of gold, and in US, people believe that Fort Knox is the biggest storage of gold. Would you say that there's any private collection that would be bigger than Fort Knox and the Bank of England's storage of gold?
No, I don't think there is. I mean, I think that there are some very wealthy people who store gold privately. That's very much their own, sort of personal situation. I think that if you ever store gold, you're unlikely to go and tell the world you're storing gold. But I think it's a really important asset class, and I'm amazed at how few people have got exposure to it. And yes, there's a lot of gold stored in the US and UK and across the world. But what I particularly find interesting is the Chinese and Russians have recently, not recently, over the last few years, significantly increased their gold reserves. And so I think the world is moving towards more gold than less gold.
Would you speculate that Chinese amassing a lot of gold and Russians amassing a lot of gold is something that increases their stability or improves their economy?
Very difficult question. I mean, I think that when you've got a currency, if it's backed by something, then it's intuitively more valuable than a currency that's not backed by something. But it's very difficult to say, what the rationale behind anything. But personally speaking, I like the idea of having exposure to something that is backed by something else, and that's one of the reasons I like gold, because it's real money. It's not like a piece of paper saying I promise to pay the bearer whatever it is. It's actually real money, and I think in these interesting times, having at least some exposure to some real money, it's no bad thing.
Okay. As an theoretic in economics, I will ask this question. It's a pure provocation, so don't get offended. You have a family, you have a bar of gold, and you need to feed the family. They are starving or didn't eat anything for last week. And I have a bread of, let's say, 2 kilos of bread that could feed your family. Would you exchange your gold bar for my bread?
Yes, I don't want to die, but can I just say in the first instance,
Yes,
I don't think you should have a gold bar. I think you should have probably silver coins, because one of the things I touch on in the book is there's different types of investments for different situations, and what you've actually just said is it's a great example. But if we ever have a situation where let's say fiat currencies have lost their value, then there's no point having a gold bar that's worth 20,000 pounds, dollars. You're better off having loads of coins, because if you want to go to a supermarket or a petrol station, you want to have something that they want, and it is a fair exchange for what you're getting. Essentially it's bartering. And so if you fill your tank up with petrol, and let's say it's $100, you want one coin or two coins that are worth about $100, and someone will probably say, yeah, I'll take your silver coins or gold coins, whatever they are, because that's a fair deal. And if you're going to catch a flight, a plane for you and your family, then having a few gold coins probably means that you've got the right money for the cost of the flight. Whereas if you've got a gold bar, you've probably got way too much money. And it's a kind of, but yes, going back to your analogy,
it's a liquidity problem.
It's a liquidity problem, and it's a divisibility problem. But that's another thing I like about gold. I could have the equivalent of a gold bar in coins, and they're all chopped up. And so I basically, in your analogy, you say, I've got all the coins on the table. You say, do you want the bread? And I said, well, look, here's a gold coin for the bread. And you're probably like, yeah, no, that's a fair deal. Here's two loaves, and here, can I have the other coin? And I'll probably say yes. But I think that's where gold really comes into its own. And, especially if you've got something, in the case of the UK, which is from the UK Mint, or in the US from the US Mint, someone looks at it and sees a golden eagle or a Britannia or whatever it is, and goes, yeah, I know that, I understand it, and I'm happy to give you my loaf of bread for your coin.
One more historical question. Are the Brits, let's say, to be blamed for such a popularization of gold these days? Because we know the Canadian mints are really popular as coins. Your royal coins are also popular. Do you think that popularization of gold in this new age, not the previous empires, is due to the British and the trading?
In short, no. I think gold is, going back to what I said earlier, it's a global asset class. People all over the world view it as valuable, and it's interesting that there is clearly demand for it, and that's one of the things I like about gold in terms of an asset class, because the all-in sustainable cost of producing gold is broadly around $1,200, and the current price is, let's say, $1,950. So if the price goes below $1,200, there's be a lot of people, not everyone, but there'll be a lot of people who stop production, because why produce at a loss? And therefore supply obviously will contract, and if supply contracts, chances are, and demand stays the same, chances are price is going to go up. So yes, there's potential downside, but I think upside is pretty much open-ended.
Okay, so where can our listeners get your book?
Well, if they go to my website, www.brookvillecapital.com, click on there and you can buy the gold package. It's very cheap. It's about £4.97. And what I suggest you do is, read the book. It's only 97 pages. It won't take you long. You get these other bonuses for free, which I think you'll find very useful. And then, if having read it, you think the gold program's for you, sign up to the gold program and we'll get you cracking. Some people may decide that they don't want to do that, which is absolutely fine. But everyone's different.
Okay, so I'm gonna include the links below in the description so that they can get to your book and other packages. Is there anything else you would like our listeners to take from this interview? Any quick tips or even secrets of the trade that you can share?
No, all I'd say is if you decide you don't want to get the book or anything like that, all I'd say is just get some exposure to gold.
Mm-hmm. Okay. So as said, I will put the links to your website and social media in the description below. Thank you, Simon, for being my guest tonight.
Thank you very much. Really enjoyed it.
Thank you, Mr. Faleskini, for this outstanding podcast. And thank you for listening to the Ask Faleskini podcast until the end. Mr. Faleskini would love to hear your feedback in the comments. And don't forget, if you want to know, ask Faleskini or listen to the Ask Faleskini podcast. In order to please the almighty algorithm, please don't forget to like, share, and subscribe.